All right, guys, here we go. We're going to do 3 AI stocks that are under $20. I think these stocks have, some upside potential. We'll see. You never know with this kind of stuff, but 3 stocks under $20, AI related. Let's go. The first one here is Himax Technologies. Okay, Himax Technologies, ticker symbol HIMX. It's currently sitting at $17.98. Over the course of the day, it was up 8.93%, and in the after hours, it's up another 1.67% to $17.98. All right, over the last 5 days, it's down 11.42%. Over the past month, it's down 14.38%. Over the past 6 months, it's up 94.07%. Year to date, it's up 115.87%. On a 1-year chart, it's up 93.22%. On a 5-year chart, it's up 24.16%. And on a maximum chart, this goes back to March 31st, 2006. March 31st, 2006. It is up 102.06%. That's Himax Technologies, okay? Let's look at this stuff. So this has a dividend. It pays a quarterly dividend of 1.43%. That's 6 cents a quarter. It's got a PE ratio of 96.6. Okay. 52-week high of $25.09. A 52-week low of $6.85 with an EPS of 18 cents. It's a profitable company we got here, guys. It's got a market cap of $3.08 billion. Billion. It's got 2,000 employees or whereabouts. All right. So they were last reported on May 7th, 2026. They got an EPS of 5 cents. They beat by 53.33%, though. They were predicted to get 3 cents. They got 5 cents. Very nice. With a modest revenue beat of 1.54%. They're predicted to get $196.00 million. They got $199.01 million. All right. Let's scroll on down, see when the last time that they missed was. Okay. And we can see right here. Q2 of 2025, they missed by 5% on EPS. They were predicted to get 10 cents. They got 10 cents, but less than they were predicted to get. And then if you scroll down to Q3 of 2023, they missed on EPS by 8.57%. And then in Q2 of 2023, they missed EPS by 45.88%. And they also missed revenue at that same time by 2.71%. So they'd be missing sometimes, but, so it goes. We'll read their at a glance thing here. Himax delivers Q1 earnings beat. Himax Technologies reported a first quarter adjusted EPS of 5 cents on revenue of $199.01 million, exceeding analyst estimates of 3 cents EPS and $196 million in revenue. Aggressive Q2 guidance signals recovery. The company issued strong Q2 2026 guidance with revenue expected to grow 10% to 13% sequentially and gross margins projected to expand to approximately 32%. Strategic focus on non-driver ICS. Growth momentum is accelerating in non-driver segments, including T-Con and WiseEye AI, with AI-driven smart glasses and CPO products gaining traction with top-tier customers. Large display drivers outperform guidance. Large display driver revenue grew 11.7% sequentially to $24.2 million, driven by stronger than anticipated restocking of high-end TV ICs, while the automotive segment reached a strategic trough. Automotive mass production to ramp. Management highlighted a significant pipeline of new automotive projects scheduled for mass production in the second half of 2026, which is expected to drive long-term growth. Strong cash position and dividend. Himax maintained a solid cash balance of $287.6 million and announced an annual cash dividend of 0.252, so a little over 25 cents per ADS, representing a 100% payout of the previous year's profit. All right. Fascinating. So if we look at their analyst ratings here on Google Finance, we've got Only one, based on one analyst giving stock ratings to HIMX in the past 3 months. We've got one guy, he says it's a buy. All right. We got one guy based on Wall Street analysts offering 12-month price targets for HIMX in the last 3 months. One dude says it's $30 is the appropriate price, and it's currently at $17.68. That's a 69.68% upside, according to that guy, you know? So that's pretty fun, you know? HIMAX, HIMAX Technologies. HIMX ticker symbol. Pretty cool. Let's move on. So here we go. We got Custom Truck One Source Incorporated. Okay. This one's $10.73 right now. Okay. Over the course of the day, it was up 4.48%, and it hasn't moved in the after hours. Over the last 5 days, it's up 9.27%. Over the past month, it's up 9.04%. Over the past 6 months, it's up 69.51%. Year to date, it's up 86.28%. On a 1 year chart, it's up 126.37%. 5 year chart, it's up 12.12%. And on a maximum chart, it's up 9.49%. Okay. All right. Now, scroll down. It has a 52-week high of $10.73, a 52-week low of $4.60, with a negative EPS, negative 8 cents. About 227.43 million shares outstanding, about 3,000 employees, with a market cap of $2.44 billion. Okay? All right. We look at their earnings. Okay? So they reported earnings on April 28th, 2026. They beat by 136.2%, 20%. Yeah. They were predicted to get 5 cents. They got 0.02 cents. They also beat on revenue. They were predicted to get $452.71 million. They got $461.62 million. That's a 1.97% beat. Scroll down. See when the last times that they missed. So look at this. They missed in Q4 of 2025 on revenue by 9.68%. They also beat on EPS. Those by Q1 2026, they beat on EPS by 136.20%. Then they beat on Q4 2025 by 108.5%. They beat on Q3 2025 by 142.59%. But they miss a lot. I mean, they do miss a lot. Here we go. They missed on revenue in Q3 of 2025. They missed all these. Those are all misses. 185.33% miss in Q2 of 2025. A 19% miss in Q3 of 2024. They just kept missing and missing and missing. Q2 of 2024, 74.73% miss. They missed on revenue each time as well. Then we get back to Q4 of 2023. They were hitting back then. So on this one, I think we go with the perspectives from across the web. Just to mix it up. Perspectives from across the web. Custom Truck One Source climbed approximately 5% recently, hitting 52-week highs. Strong Q1 2026 performance and raised EBITDA guidance drive momentum. Analysts project further gains with median targets near $11.50 as sentiment suggests optimism surrounding utility infrastructure and deleveraging progress through the next quarter. The bullish view. Robust Q1 performance and guidance hike. The company reported record Q1 2026 revenue of approximately $462 million, a 9% year-over-year increase. Due to strong transmission and distribution market conditions, management raised full year 2026 adjusted EBITDA guidance to a range of approximately $415 to $440 million. Strong specialty equipment rental growth. The specialty equipment rentals segment saw third-party revenue surge roughly 16% year over year. Segment utilization reached 81.4%, a 370 basis point improvement, supported by record original equipment cost on rent, which hit approximately $1.66 billion by the end of the first quarter. Strategic deleveraging and free cash flow. Management is prioritizing deleveraging, having reduced net leverage by roughly 30 basis points in Q1, expected inventory reductions of over $100 million, and reduced net rental fleet investment are projected to unlock significant free cash flow throughout 2026. Here's the bearish view. A high debt and leverage concerns. Despite recent progress, the company carries a substantial net debt of approximately $1.65 billion, with a net leverage ratio slightly exceeding 4 times. Analysts remain concerned that high debt levels could limit flexibility if market volatility increases. Slowing annualized revenue growth. While Q1 results were strong, the company's annualized revenue growth of approximately 4.3% over the last 2 years remains below its 5-year trend. Some analysts suggest that current projections for 3.8% growth over the next 12 months indicate a lack of immediate top-line acceleration. Valuation and profitability headwinds. Current analysis indicates the stock may be trading above its fair value following a 121% one-year gain. Additionally, the company was not profitable over the last 12 months, though analysts estimate a turn to profitability later this fiscal year. All right, so they've got 5 analysts giving stock ratings to CTOS in the past 3 months. There's 3 buys, 1 hold, and 1 sell. On this 12-month forecast thing here, they've got 5 Wall Street analysts offering 12-month price targets for CTOS in the last 3 months. The highest one's $13. The average one's $10.60. That's a little lower than where we're at right now at $10.73. $13 is a 21.16% increase. And then the lowest one is 25.44% down at $8. $8. All right. So that's Custom Truck One Source. Very interesting. Okay. Keep moving here. We got Pagaya Technologies, PGY. All right. It's currently sitting at $15.75. Over the course of the day, it was up 8.62%. And in the after hours, it is down 1.4%. Actually, to sit at $15.53 right now. Okay. The last 5 days, it is up 7.36%. In the last month, it is up 8.32%. In the last 6 months, it's down 36.9%. Year to date, it's down 24.64%. On a 1-year chart, it is down 13.41%. On a 5-year chart, it's down a lot, 86.43%. And on a maximum chart, that goes back to April 23rd, 2021, it is down 86.57%. Okay. Now, they got a PE ratio of 14.59, an EPS of $1.08, 71.60 million shares outstanding, 511 employees, a market cap of $1.31 billion. They got a 52-week high of $44.99, a 52-week low of $10.41. Wow. So we'll go into the earnings here. It doesn't have their little call up there. So we'll just scroll down. They beat on EPS in Q1 of 2026 by 29.44%. They're predicted to get 56 cents. They got 73 cents. They missed on revenue at that same Q1 2026. They were predicted to get $323.84 million. in revenue, and they got $317.94 million. That's a 1.82% miss. Then they missed in the previous quarter by 4.21%. They missed on EPS in Q2 of 2025 by 5.04%. They missed in Q4 of 2024 by 46.57%. Q2 of 2024 by 63.7%. So they miss. They miss quite a bit. The perspectives from across the web. Pagaya Technologies advanced over 6% recently following a fifth consecutive quarter of GAAP profitability. Catalysts include an earnings blowout, raised full-year guidance, and significant insider buying. Analysts project sustained EPS momentum and a consensus price target of approximately $33.11, suggesting substantial upside as the company leverages its asset-light AI model for scalable growth. The bullish view. Strong profitability and guidance hike. The company reported Q1 2026 EPS of 73 cents, significantly beating the 20-cent estimate. Consequently, management raised full-year 2026 GAAP net income guidance to approximately $110 to $160 million and updated adjusted EBITDA forecast, signaling confidence in sustained operation leverage and fee generation efficiency. Strategic partnerships and personnel expansion. Recent developments include a new personal loan partnership with Experian and a point-of-sale agreement with Sezzle. To drive further growth, the company appointed a former city managing director as chief commercial officer and successfully closed a $600 million upsized auto ABS traction. Significant insider buying signal. CEO Gal Krubiner recently made substantial share purchases following the Q1 results. This move is interpreted by market analysts as a strong signal of internal confidence in the company's long-term value and current undervaluation relative to peers. The bearish view. Macroeconomic and interest rate sensitivity. Despite strong results, the company faces risk from a challenging macroeconomic environment and potential credit cycle shifts. Tighter pricing on ABS tractions due to higher capital costs can squeeze take rates, while a recessionary scenario remains a risk to network volume. Concentration and growth deceleration risks. A single related party customer represented approximately 20% of fee revenues in Q1, highlighting concentration risk. Additionally, some market segments perceive the projected 2026 revenue growth as a slowdown compared to previous hypergrowth expectations. Ooh. Wow. So let's look at this. So 3 analysts have given it a rating in the last 3 months, and they gave it a strong buy. 3 of them. 3 analysts have also done 12-month forecasts in the last 3 months. One of them gave $32. That's a 103.17% upside from here. One of them gave $30.33. That's a 92.57% upside. And then the lowest one was a $27 prediction. That's a 71.43% upside. Interesting. All right. So that's Pagaya Technologies, ticker symbol PGY. That's going to be enough, guys. It's your cousin Dustin. Hope you guys liked the video. Like and subscribe.